Welcome to this explainer. So, if you're out there organizing a commune, you probably already know how to share physical labor, right? Sharing chores, working the land, that's the straightforward part. But sharing actual finances, well, that can get messy real fast. Today, we're exploring a source text titled Functions of Credit Unions, and it details exactly how a community can organize its resources to build its own financial backbone. And the best part? It's based entirely on mutual aid, supporting both our collective projects and individual needs. To kick things off, the source text poses a pretty radical alternative. How do you actually build a financial system without bosses or banks? It lays out a highly practical way to handle your commune's resources that completely avoids recreating the exact same power structures we're all trying to escape. Okay, let's dive into this foundational contrast. The text points out that traditional banks use interest to essentially extract wealth from you. It's a profit-driven hierarchy. But this credit union model, it flips that script entirely. It replaces that logic of extraction with the logic of mutual aid. It is built specifically to keep resources circulating inside your community rather than siphoning them off for someone else's profit.
At the very heart of this system is something the source calls the mutual fund. Now, I know mutual fund sounds a bit like Wall Street jargon, but think of it simply as your commune's shared seed vault. You're pooling the surplus from your collective gardens, your workshops, and your shared ventures to create a solid financial foundation that you all actually own together.
And to keep things fair, the source outlines a strict democratic split for this pooled fund, so it serves different needs within the ecosystem. A major chunk of the pie goes straight to collective projects, a designated third is reserved so individuals can take out loans, and the rest is kept safely tucked away as secure reserves and savings.
All right, moving into Section 1, establishing an open and transparent ledger.
The text highlights a specific tool to achieve this transparency, the Digital Commune app. This acts as a publicly accessible digital ledger, documenting every single transaction. Imagine this like an open recipe book sitting right in the middle of a communal kitchen. Before anyone starts cooking, or, in this case, spending, everyone can just look at the book and see exactly what ingredients are available, who used what yesterday, and what's left. There are absolutely no financial secrets.
By letting members just jump in and view balances or track fund allocations at any given time, this level of transparent record-keeping does something absolutely vital. In a commune setting, secrecy breeds paranoia, right? But transparency builds trust. According to the text, this open record-keeping is what ensures the collective wealth actually stays collective.
That brings us to Section 2, Funding Our Collective Future. Instead of enriching some distant CEO, the text shows how the fund pays for things you all actually use every day. The source lists some great specific examples: solar panels for the local grid, community clinics, sanitation infrastructure, or even just planting fruit trees and building a tool library. The wealth circulates locally, it launches new cooperative ventures, and ultimately strengthens the whole ecosystem for everyone involved.
But, it's not all just about large-scale infrastructure. What happens on a personal level? Say you, individually, need a new bicycle to get around, or you have sudden medical needs, or you just want to start a small passion project. The collective is super important, but individual needs still very much exist.
Which perfectly segues into Section 3, borrowing without the burden.
Here is where the model truly fundamentally diverges from a traditional bank. The loans are entirely interest-free. Because there's no interest, borrowing from the mutual fund is really just like borrowing a tool from the community's shared shed. Think about it. If you borrow a neighbor's ladder, you don't owe them the ladder plus a step stool when you return it. You just return exactly the value you took, with zero extra tax or penalty for the privilege of borrowing.
To make this work fairly in practice, the text details a structured four-step process. It ends in something pretty radical regarding repayment. After transparently applying and getting consensus-based approval, which prevents any favoritism, you receive the funds. But for repayment? If you're short on cash, you can actually repay your loan in credit hours. Your labor and your time, like pulling weeds or fixing roofs, are treated as completely valid currency. And finally, Section 4, Safe Savings and Solidarity. Say you have some surplus cash, or maybe you've racked up extra credit hours from pulling extra shifts. You can safely park them right here. The text emphasizes that you can withdraw these resources when needed without any penalties or bureaucratic red tape. It essentially gives you the security of a bank, but it's built entirely on community, trust, and solidarity.
Now, to stop this from devolving into just another hierarchy, the text outlines 3 core principles. First, democratic control. This means the Financial Commission is strictly accountable to your General Assembly. We're talking direct democracy here. Second, Collective oversight, meaning anyone can audit the books, monitor the flow, or propose changes. And finally, an ethic of solidarity. This ensures all lending and saving are guided strictly by mutual aid, making sure absolutely nobody gets left behind.
The source text actually uses the term prefigurative politics to describe this whole credit union model. That's really just a fancy academic way of saying, don't wait around for the revolution to fix your finances. You build the future you want by how you organize your institutions right now, today, through your present actions and relationships with each other.
By weaving economics so tightly into the fabric of solidarity, the system culminates in this really powerful takeaway from the text, finance without domination. The credit union reclaims finance from being a tool of exploitation and totally transforms it into a tool of collective liberation.
As we wrap up this explainer, I really want you to consider how these mechanics apply to your own daily life and your own organizing. If you were operating within this framework, how would you use a system like this? How will you invest your credit hours or resources into your community's shared ecosystem today? Thank you so much for exploring this fascinating model of mutual aid with me. Keep learning, keep building, and I'll catch you in the next explainer.